Hello everyone, welcome back to Stocks Trading and Analysis channel. I'm Jeremy, and this channel is dedicated to providing you with high quality tutorials, guides, and insights that demystify the world of trading. So whether you are a beginner taking your first steps in the financial markets or a seasoned pro looking to refine your strategies, there's something here for you. Okay. And as Singapore celebrates its 58th birthday, we commemorate by looking at companies listed on the Singapore Stock Exchange, where I'll be sharing on how I screen for our top stock pick, and then I will do a deeper analysis on the stock pick for you guys. So stay tuned to the end of the video to find out our top stock pick that has delivered remarkable 3-digit returns for the past 1 year. And before I start, can you guys just comment below one SGX listed company that is at the top of your watch list currently? And we'll see if any of the companies that you guys mentioned is the company that I'll be sharing later on. Okay. And before I start sharing, I would like to state a disclaimer. So this video does not serve as a professional financial advice. For professional financial advice, you should still seek advice from a financial advisor after doing a holistic financial assessment. Okay. Next. So with about 650 companies listed on the SGX, we will need to be clear what are the criteria we look for in a company in order to narrow down this long list of companies listed on the SGX. For the screening process, I prefer it to be simple and easy to implement, and my objectives are to find good companies, and secondly, to find undervalued companies. Okay. Firstly, I'll define a good company as one with a high return of equity or ROE, because the primary purpose of businesses and companies is to maximize the returns of the shareholders. And ROE provides insights regarding the business profitability for both owners and investors. It helps investors understand whether they are getting a good return on their money and evaluate how efficient the company is at utilizing its equity. It only makes sense to buy stocks of companies that can make the most profit for their shareholders. So the formula for calculating the ROE basically is using the annual net income and divided by the shareholders' equity. And secondly, I will then define an undervalued company as one with high earning yields, as shared by Benjamin Graham, also known as the father of value investing. The Mr. Market tends to be irrational in the short term, but in the long run, he actually values stocks close to their true value. There are times to exploit Mr. Market's unstable emotions, that is to buy from him when he's depressed about stocks. In this way, you can buy the best companies at a low price. One way to do this is to purchase a business that earns more relative to the price you are paying rather than less. And one metric you can use to measure this is the business earning yield. The earning yields is essentially the same as earning per share or EPS, and it is also the inverse of the PE ratio. In order to rank the SGX listed companies based on the two factors that I just shared, I'll be using the stock screener available on the SGX website, known as the SGX stockpicks, which is a collaboration between SGX and Refinity. For the stock screener, there are many more metrics available for you to use to screen for stocks based on your preference. You can click on the filter option on the top right and can select the metrics you would like to use to narrow down on your investment universe. For the screening of good companies, I'll be using the ROE metric, which is available on the stock screener. And as mentioned, the higher the ROE, the better. And as for earning yields, I'll be using the PE ratio, which is an inverse of the earning yields. And the PE ratio is also available on the stock screener. And generally, the lower the ratio, the more undervalued a company's stock is. So if you like to try out the screener yourself, you can pause the video and scan the QR code on the screen, or click the link in the description box, which will bring you to the SGX screener page. So, however, after the screening process, I noticed that a lot of penny stocks came out on the list, possibly due to their high ranking in the PE metric. So for penny stocks in Singapore, they are traded in cents. To be more specific, they are less than 20 cents. However, personally, I am more comfortable with stocks that are trading at a price of at least 50 cents or more. That being said, I added two extra criteria to my screening process to sieve out potential penny stocks. So the first extra criteria would be the counter has to be trading for more than 50 cents. And secondly, it needs to have a market cap of at least 10 million Sing dollars. The reason being, penny stocks tend to be highly volatile, have very low liquidity, especially in the SGX market, as well as being very prone to speculation, making them very risky counters to hold, right? So after the screening process, based on my initial metrics of high ROE and low P ratio, as well as the two additional criteria mentioned, I will have a more organized list of stocks ranked based on the criteria. And with the list, I can start to do some preliminary research by going through the list. I then go down the list, starting from the top rank, to look at each of the counters' past 5 years performance minimum, as well as whether there were any analysts covering the counter. This is in order for me to conduct further analysis later on. So it is good to actually read on analysis report, as that is literally their job, spending hours on the screen each day, analyzing the stocks within their coverage, saving the time and effort for average investors like us who have a day job. And also research analysts usually tend to have more resources to do their analysis. For instance, having access to Bloomberg terminals, being able to go down for AGMs or financial results announcements, etc., or even able to conduct draw interviews at the company site itself to understand the business model better. Right. So after my preliminary research, I managed to screen out one counter that we can look at today, and that is Food Empire. Okay, so Food Empire actually has an ROE of about 23% and a P ratio of about 7.7 times. So let's understand this company better by doing some qualitative analysis to complement our screening process, which was actually based on quantitative metrics. So Food Empire is in the consumer staple sector, focusing on food and beverage products. It is a multinational food and beverage manufacturing and distribution group headquartered in Singapore. Its branded products include a wide variety of beverages and snack food. And their core product, which is instant coffee beverages, is marketed mainly under the McCoffee, Classno, and Cafe Right brands. Their product offerings are categorized under beverages, non-beverages, as well as ingredients. So Food Empire's products are sold in over 60 countries, spanning North Asia, Eastern Europe, Southeast Asia, Central Asia, the Middle East, and North America. So a little bit about the company's profile. So it was founded in 1993 and listed on the SGX in 2000. And Foodpanda has actually won numerous accolades and awards, including being recognized as one of the most valuable Singapore brands by IE Singapore, while the McCoffee has been ranked as one of the strongest Singapore brands. Forbes magazine has also twice named Food Empire as one of the best under $1 billion companies in Asia. And the company has also been awarded as one of the Asia's top brands by Influential Brands. So they actually have a very long list of awards, which you can find more on their website itself if you're interested. So all of these are actually a very strong testament to its strong brand equity. Their revenue comes from 3 main regions, namely Russia, Ukraine, Kazakhstan, and CIS markets, and thirdly, Southeast Asia. So on the screen, you can see their FY 2022 revenue categorized based on the geographical regions. So for the past year, the stock has actually delivered an impressive returns of about 113%, I would say. So now let's look at their present situation. So for FY 2022, despite the geopolitical tensions in its core markets, such as Russia and Ukraine, as well as the rising inflation, the group actually managed to generate a record level profits. So Food Empire reported a net profit of about $60.1 million for 2022, and an increase of a whopping 211% year on year, while revenue grew by 24.5% year on year. So Russia reported revenue growth of 29.1% to 148.4 million, mainly due to strong consumer demand, as well as the appreciation of the Russian ruble against the US dollar. And similarly, despite fluctuating currencies from geopolitical uncertainties, its Ukraine, Kazakhstan, and CII segments actually achieved 28.6% year-on-year revenue growth. However, revenue from the Southeast Asia segment fell 4.2%, mainly attributable to the post-pandemic normalization in Vietnam, but was also partially offset by the improved contributions from Malaysia's non-dairy creamer and snacks manufacturing facilities. Additionally, the group was once again recognized as the top 100 most valuable Singaporean brands by Brand Finance for the 12th consecutive year, with its estimated brand value increasing 70% year on year to about $101 million, which is a very strong testament to its strong brand equity. So the company has also reported its 2023 first quarter results in May this year. And for that quarter, Food Empire actually reported net profit of about $13.8 million, accounting for about 29% for full year forecast, while revenue actually rose 24.2% year on year. So from its 2022 and the 2023 first quarter result, we can see that the level of demand remains strong for Food Empire's products, despite inflationary pressures as well as the geopolitical uncertainties in its core markets, which is Russia and Ukraine. And this could be mainly due to the consumer staple of its product, where demand is relatively price inelastic. So this means that the change in price results in a less than a proportionate change in demand. So other examples of goods or services that are price inelastic are things such as tobacco, utilities, food, etc. So the group's product in the coffee segment is considered an essential item that was not placed under sanctions, leading to a sustainable or even a stronger demand as proven by the company's consistent result. Another thing to note is that the company has been ramping up its share buybacks over the past 3 years as the company's financial performance improved. Okay? So as of 13 April market close, the company has brought back about 16.98 million shares. And this actually reflects the management's view that the shares are undervalued relative to the company's performance and potential for growth. The share price is currently trading at about 7.7 times its earnings as compared to other listed beverage companies that make instant coffee, such as Nestle, Mondelez International, Starbucks, Kraft Heinz, and Tata Consumer Products, which are all trading above 20 times their earnings. Next, let's look at the outlook for Food Empire. So I believe that its strong performance should likely persist from the strong demand in its core CIS markets, especially in Russia. And as said earlier on, due to the consumer staple nature of its products, demand is relatively price inelastic, and the cost of raw materials, trade, and logistics from high inflation can be easily passed on to consumers. And on top of that, despite the geopolitical uncertainties in its core markets, it will have a little impact on its core products offering, which is the 3-in-1 coffee mix, which is considered as an essential and unlikely placed under the sanctions. In addition, the management's focus on expanding in Vietnam to diversify beyond its core markets such as Russia and Ukraine has shown positive signs in terms of traction, and this should likely support its top line in the near to mid-term. Food Empire is also ramping up new capacity in Southeast Asia to support the greater production of its new potato chip brand called Cracks. So the expansion of a facility to manufacture non-dairy creamer will also begin commercial operations by the end of 2023. Next, sales in its India market has also doubled in 2022. Its spray dry and new freeze-dried coffee plants are expected to operate at full capacity in 2023, capitalizing on high demand. So these are all good brands and good distribution channels which the company has built up since 2012, when it actually started diversifying beyond Russia and Ukraine. So these channels should likely support the company's expansion plan and subsequently its top line figures moving forward. Next, I also believe that the management will continue unlocking the shareholders' value by continuing its buybacks, concurring with my view that the shares are undervalued based on its relative PE ratio. Lastly, it is important to note that Food Empire has quite a competitive moat since its industry has a high barrier of entry, and it also possesses quite a sticky brand recognition from the awards and accolades it has received over the years, as shared earlier on. So some price catalysts you can look out for in the near to mid-term are things such as the end of the Russia and Ukraine conflict, as well as continued strong growth in other markets and revenue diversification away from Russia. All right. So to conclude, I would say the SGX market still has plenty of strong and quality companies for you to look at. And you can actually repeat my screening process to select other companies based on your preference. Okay. And if you have the time, you can even dive deeper into the about the company that I just shared for a better understanding. You can ask questions such as about the management quality, the share price drivers over the years, any red flags in the past, its competitors, and so on. You can even include technical analysis to get a more comprehensive understanding of the counter. Okay, so I hope you find this video useful in guiding you on how to screen out for potential opportunities in the SGX market. If so, please leave a like for this video and subscribe to our channel so that you will not miss out on our latest video in the future. And this will also greatly motivate us to produce more quality content in the future. Lastly, we also have a Telegram channel where we actually aim to educate the public about the financial markets and help you guys to become an educated trader. Apart from educational posts in the group, we also conduct exclusive Telegram lives every Friday for our members on various topics on investing. Okay, so if you'd like to join, you may scan the QR code on the screen or click the link in the description box below to join our Telegram group. Okay, and lastly, comment below on what kind of content you would like to see in our next video. And thank you so much for staying on to the end of the video. I wish all of my Singapore friends a happy National Day and see you guys in our next video.